Hello and welcome to this introduction to filling out the DOE indirect rate model for the SBIR STTR Phase 1 program. What we really want to do is familiarize SBIR STTR applicants with all three DOE indirect rate models so they can be submitted with their Phase 1 application. Those in the DOE as well as the other agencies understand that this is a difficult area of the SBIR STTR process for many new applicants. So we'll be reviewing the submittal requirements for your budget related to indirect rates. We'll address the indirect rate structures and some of the decisions you'll have to make when developing your indirect rates. And I'll be giving a live demo, giving you a tour of each one of those, the DOE's three indirect rate models. We all want you to be successful and bring forth your best ideas. This demo is designed to make this part of the process less of a stumbling block. So I encourage you, if you haven't done so, to review other tutorials and demos describing indirect rates and the subject of indirect rates and indirect costs. Specifically, tutorial number 28 has a wealth of good basic information to get you started. There are a couple of sections of note in the grant application regarding indirect rates. You'll see a column called Fringe that I've circled in the labor section of the application budget. Just make a note of that and we'll come back to that. Also, in section H of the budget, there's a more expansive section reserved for indirect rates. Note the terms being used for the headings. Indirect cost type on the left. In the middle is the indirect cost rate, which is expressed as a percentage, and then the indirect cost base. And finally, the number that reflects the funds that you are requesting for this particular grant for your indirect costs. Again, we'll come back to these, but these will be the sections you'll fill out in the budget relative to indirect rates. The DOE has three models to choose from on their website, and they may send these to you upon notification of award as well. There's a simple single G&A rate model, or otherwise called a one pool indirect rate structure. Next is a modification of that single G&A rate, but this time using fringe as a direct cost, otherwise called a two-pool rate model. Then there's a three-pool rate model that calculates a fringe rate, an overhead rate, and a G&A rate. For most full-time applicants, you'll want to choose either the one-pool or the two-pool rate structures. I only recommend the three-pool rate structure for larger organizations or those with more familiarity and experience with developing indirect rates. Decisions to fringe or not to fringe. That's one of the decisions you'll face, is whether fringe costs will be included in your single indirect rate calculation or expressed in your budget as a separate indirect rate. Let me repeat that. You could either have your fringe cost considered a part of your one single indirect rate pool, or you could split that out and express it as a separate indirect rate. Proposing a separate fringe rate is a budgeting technique we find prevalent in the academic research world, but it's an accepted practice even within other agencies, including the DoD and NASA. So it's really up to you and your preference on how fringe rates get calculated and displayed as a budget item. The next decision is really what DOE indirect rate model you want to use. The DOE will also send you a narrative having guidance on how to calculate your indirect rates. And these are the major pointers. Costs should reflect a full year of activity, typically a fiscal year, but it could also be some other designated annual period. All work should be included in calculating the indirect rate, meaning if you have other ongoing projects, even if they're commercial work, as long as they're revenue generating projects, they should not be excluded when you're calculating your indirect rates. They should be included as part of the calculations. It should be obvious to a reviewer of your indirect rate model which costs are in your pool and which are in your base. And if you're using the DOE models, this is already done for you. So now we will dive into the demo. We'll begin looking at the two-pool model first, then we'll briefly address the one-pool model and the three-pool model, since many aspects of the models are similar. You would use the two-pool model only if you've made that decision to include fringe as a budget item separately for labor on your SF 424 budget application. So a quick look through the tabs, at least these first couple tabs, the table of contents. Pretty self-explanatory. It has some hyperlinks in here, so that works pretty well. You'll be adding data into this worksheet tab. All the other tabs self-calculate from the worksheet data. So the worksheet is really the key input area of the model. Let's look at the instructions just briefly. You can read through those yourself. We'll come back to step one in a minute, but be aware of this color key. Again, that color indicates that the cell is linked to another spreadsheet, and that color indicates that there's a formula attached to that cell. And then there's an area in the model for notes. And again, try and ignore the overhead rate hyperlink. So, with that, let's look at the worksheet. This is where most of your work is going to be done, no matter which model you select to use. The data used in each model as examples are identical, meaning these numbers are input discretely, and you'll see those identical numbers in each of the models just as examples. The cost categories are also the same. It's worth going back to the instructions tab, and remember we were going to go back to step number one here. It says utilize company trial balance for all expense accounts and fill in the account names and account balances on the worksheet tab. Well, this is all accounting language that implies the model is used or was designed primarily for calculating rates using costs that had already occurred over a period of time, most likely an entire fiscal year. So that's the term why they use the term trial balance. They're assuming that you already have some accounting data. It's in something called a trial balance or also a profit and loss statement. and those are where the numbers are coming from. So that's sort of a look back approach. Um, but even though we're looking at things purely on a budgetary basis, so we're looking forward, there's no difference in how this model works. It's intended to work either way. So when you look at the worksheet and the list of accounts, these represent all the possible expenses you might have within your firm, within your business. And again, column D shows the amounts. Now these columns to the right are the cost pools where these expenses get allocated or where these expenses go. So let's take a look at these real quickly and define what our terms are. Direct pool, that would be your project costs. These are the costs that you would incur or project to incur directly to accomplish whatever project you're on contract for or that you have a grant for. IR&D, B&P, those are expenses. IR&D means independent or internally funded research and development, and B&P signifies bid and proposal. That type of activity, such that similar to what you're doing right now, preparing to apply for a DOE grant or some other agency grant. That's where those budget items would go. Next is fringe, and since again we're using a fringe and a G&A system for your indirect rates, we have a column that strictly isolates all your fringe costs. And then to the right of that is G&A. G&A stands for general and administrative. These are costs that, they're not project costs, they're general and administrative costs that you can apply for you to run your business, to help you run your business. The column next to that is called the unallowable column, and these are costs that are expressly prohibited from being either budgeted for government contracts and grants or billed through as a government or government contract or grant cost. And so you'll see how some of these costs are allocated between the cost pools, and we'll get into that in a minute. But first, let's go through some of these accounts in a little bit more detail. And right off the bat, we're confronted with labor. And labor is particularly troublesome for a number of reasons. One, as you can tell, it's typically the largest amount in any given budget. And in this case, in this example, it's a little less than half of the total company expenditures for this particular period of time. And when I look at the model, it just has some numbers in there allocating out the $515,000. But in practice, what you're really going to have to do is get into the details of what makes up each and every one of those pools when it comes to labor. So that's why what I always like to do in any model, if it doesn't already have one, I'll put a labor calculator out to the side. So what I want to accomplish through this is to come up with a dollarized figure of projected or budgeted amount for each one of these pools. So to do that, I have to do a little bit of detailed analysis. And that starts off with listing your employees, listing what their salaries are, converting that salary into an hourly rate, because the basic metric for measuring labor is going to be hours. And when you get post-award, that's the same concept. Is that you accumulate, you record your labor based on hours and multiplied by an equivalent rate based on your salary. So you see what I've done is I've taken the salary of an individual, I've divided it by 2080. You'll see that formula in here, and that's the common approach since there's 2080 hours in a year, including when you're working and when you have paid time off or holiday. And then what I like to do is estimate how many hours someone's going to work per individual for each activity, whether it's a project, and I have my projects highlighted in yellow here, job 1, job 2, job 3, and then your non-project cost, or otherwise your indirect cost, the independent research and development and bid and proposal area, and the G&A or admin for short, and then PTO, that stands for paid time off. And even if you don't have a full amount of 2080 hours at the end, that you may not be working full time during the year, and that's fine. But as long as you can develop your hours in a manner that makes some sense on what your predicted activity is going to be over the year, that's really what you want to do. After that, then you convert that data into hours, simply multiplying the amount of hours you predicted by the equivalent hourly rate based on your annual salary. That derives your dollars. Then you add up all those dollars for all your jobs, all your project cost, and that gives you your cumulative direct labor. That's the figure that you would want to go in cell E9 on the budget model. Likewise, you've derived the figure for IR&D, B&P. That could go in the model. Admin, that could go in the model under G&A. And then your fringe, PTO, I've combined all the PTO into one. On the model, they break it out by vacation, holidays, and sick leave. You can choose to expand your model to do that. But customarily, I think everybody's comfortable with aggregating that and calling that PTO. So like I said, as far as budgeting goes, you really need to concentrate and do a little bit more work surrounding the labor. Otherwise, you might be taking guesses. Someone, a reviewer, might be asking, well, please substantiate that number. And unless you have a calculator off to the side doing that, that's going to be difficult to do. So after labor, and quite conveniently, the model has listed a number of fringe benefits. I guess I didn't define fringe benefits very well. I think everybody customarily knows what fringe benefits are, but they're listed right here. All your paid time off, your employer paid payroll taxes for W-2 employees. If you want to, you can contribute to a 401k plan. That's an allowable cost. So is subsidizing medical insurance premiums, life insurance, things like that. Your basic common fringe benefits, they are an allowable cost. And so it's convenient that they have those fringe benefit items stacked up here in the model quite nicely under the fringe column. You may have others that aren't listed, and it's appropriate to change these account names to reflect any costs that aren't listed. I guess a word of caution, and as you know with any Excel model, actually adding a row or a column might be troublesome. So I would try and avoid that, but at least within the account listing, feel free to generate any organization that you feel is appropriate. All right. And next comes a group of expenses, the types of which can be allocated by project, meaning your direct costs, or other indirect costs. As an example, you may be buying materials and supplies for your project, more than likely, but you may have an IR&D project off to the side that you're also wanting to provision with some materials. Same with consultants. You might have them working on a project, or you may have them working your proposals for you, or maybe even doing your accounting or some other business management operations over in the G&A area. Travel is a good one. That crosses over many different pools typically. And other direct cost is anything else that can't really be defined by any of those other costs. And then we have this outlier, this direct equipment purchases. Primarily that's a direct cost and a special type of cost. You'll see that in your budget application, how that's described. After that, most of the rest of these accounts are pretty much what you might expect in a normal business operation. And again, most of them are allocated to, well, yeah, all of them are allocated to G&A, with the exception of there may be some legal costs that are deemed unallowable, as well as interest, which is always considered an unallowable cost. So these costs don't get considered when you're calculating your indirect rates. You'll notice there's a proof column on the far right in column J. That's a handy technique to make sure you've allocated all your budget items over here in column C, in column D, excuse me, to a particular pool. So if these two figures don't match, you haven't allocated something correctly within the budget worksheet. So really after that, you've completed the toughest part of the model, the data input, and in particularly the labor section. So now let's see what magically happens through all the formulas. The bottom of your model here on row 43, that shows the totals for each pool. You'll see that. So really what's this is saying, out of $1.1 million, you've got a little over $500,000 as direct project costs. You have $350K in G&A and some fringe, and a little bit of independent research and development, with unallowable costs being off to the side. There's this other line, line 45, that mathematically, what that's doing is mathematically allocating the fringe costs to your other pools. That's just good information. It's nothing that you need to worry about as far as your budget application. It's just demonstrating that how that allocation of your fringe can be allocated out to the other areas of your cost pools. So let's bounce over to the fringe tab. This shows the details of how the fringe rate is calculating. And you remember the color scheme here, they're pulling these numbers over from your worksheet. And then these purple numbers are calculations. So it's listing all your fringe costs in the pool or the numerator, and all the expenses in the base or your denominator. So that's a pretty simple formula. And this is the type of information you'll need for filling out your budget justification form if you're reflecting fringe costs as a project cost in your budget. That calculation that derives your fringe rate right there. And if you'd like, go ahead and use this notes section to articulate some of the details surrounding how you're paying your absences. The G&A tab here, that gets a bit more complicated. It lists all the indirect costs in the pool, again pulling over from the worksheet, but it also adds fringe costs as an allocated portion from the fringe pool. You can see how that's calculated up here. It's the labor multiplied by the fringe rate that you've calculated. Okay? You'll see that happening as well down here with the IR&D labor, the labor multiplied by the fringe rate. And in the base, you see that as a function of direct labor. Now that's divided by or multiplied by the fringe rate. So again, the pool of indirect expenses being the numerator, the base being the denominator, that calculates your indirect rate. And within that base, you'll see it's all the project costs. So it's a simple formula. Your indirect cost divided by your project cost, that derives your indirect rate. So you'll use this rate to enter into your SF424 budget form to calculate your indirect cost budget for your particular application. One last thing to note, and it can be a bit confusing at first, I admit, you'll be asked in the budget forms what your G&A base is. That is, on what basis are the indirect costs applied in the calculations? Well, as you see here, again, the numerator being all your indirect costs, that number, the 420,602, divided by your denominator, all your project costs, the 693,998. And I built this little allocation schedule off to the right here as sort of a demonstration of what we're going to go through here. If we're calculating this, and this is being calculated on what's called the total cost input basis, or TCI, total cost input basis. And as that implies, is taking into account in the denominator of the formula all your project costs. Now, there may be a reason why you might want to exclude some costs from your G&A base. For example, what we're seeing here, if we were to make some calculations where you've got $420,000 in G&A and you were allocating $248,000 as a function of direct labor. We're allocating some as material and supplies, consultants, travel, equipment, and subcontracts. Well, a reviewer might take exception to the fact that, hey, why am I paying $60,000 on top of $100,000? What kind of benefit am I getting for the $60,000? Does it make sense as applied to the $100,000 subcontract? So one method of approach to that, to mitigate that, is what's called a modified total cost base, or otherwise called a value added base. A value added base is more specific. It says that you will exclude materials and subcontracts from your G&A base. So I'm just going to remove the subcontracts from the G&A base, and we'll see what happens to our formula. Let's do it this way. So what we've done now with the formula is we've taken that $100,000 out of the base, so we're not applying the indirect costs in the formula. So whereas you had an indirect rate of 60%, now you have an indirect rate of 70%. But don't forget, you're only going to apply that 70% to everything but the subcontract costs. Another way that's being expressed is the subcontract costs are a pass-through. They pass through your operations without an allocation of your indirect cost. So in fact, if we take this figure away, whoops, we balance again. So then the allocations are a little different now. They're more weighted towards the higher direct cost, that being labor. And some reviewers think that's a more fair or accurate representation of your indirect rates, or how you apply your G&A rates, than the total cost input method. So let's just put that back to the total cost input method, just so we know we're back there. Okay. So the point here is the most common and obvious choice is the total cost input basis. But there may be instances where you might want to consider a modified total cost base. These are both totally acceptable techniques, but they should be specified as such in your budget. So once we get through the G&A, looking at the G&A, the rate summary tab really is a quick look summary of both your rates, your fringe rate and your G&A rate, expressing both the pool and the base used in calculating your rate. These are the rates that you'll be using in your budget application if you use this particular DOE rate model. So this concludes the demo of the two rate model, let's take a quick look at the one pool model. And with the one pool model, you'll find the worksheet figures are exactly the same as the two pool model. The difference is, right, there's no fringe column, no fringe rate is being calculated or separately proposed. Remember, you have a decision to make on how you express your fringe rates, either as a separate rate, as we saw in the two pool model, or wrapped up into a single G&A rate. So again, this is the rate you'll use on your budget in section H if you're using a single rate. So these numbers are all the same, assuming you have something off to the side to calculate your labor. You can fill those numbers in. Again, now you're calculating your G&A rate using all your indirect costs, and you notice you don't have a fringe element in here. That's all lumped in together in your G&A pool. And then that's divided by your base, which is, it's been consolidated here, but it's all your direct project costs as well. And that derives a single rate, which should be equivalent to your two rate system. It will calculate your project costs a little differently, but the output should be the same. So as far as modifying this base figure on the overhead tab to exclude selected project costs from the base, that's still an acceptable method. It should be clearly stated somewhere on this model though, and as well in the SF424 budget and on the budget justification form. You should express what type of base you're using, either a total cost input base or modified base. Again, the three pool model again starts out with the same budget numbers or the same structure as the other models, but what you'll find on this worksheet tab is now a separate column for what's called overhead. And I like to define overhead expenses as those that support the direct project labor. So it's another segregation of your indirect costs, a little finer segregation of your indirect costs. Instead of putting everything into G&A, now you're isolating some activity that is really caused by your direct labor. This could include management of technical staff, technical meetings, facilities, or other fixed costs. And you'll see that demonstrated here in their model. Some of these costs, let's take rent for example, you'll see are allocated between overhead and G&A. And it's not clear how this is done. They just put in the numbers. It looks pretty random to me. And if I were a reviewer, I would want to know how these costs were split or how these costs were allocated. So it appears to me there's a bit of critical information missing from this particular model. So in your case, you will have to come up with a device or an approach that if you were wanting to allocate some of these costs into other areas or across both overhead and G&A, you need to come up with a mathematical convention to do that. That's why this model, that's one of the reasons why this model is a little bit more complex than the other two models. But in any case, this then allows you to calculate an indirect rate using overhead costs in the pool. We're just looking at overhead, including the fringe that's applied to your overhead labor, now that you have that split out. And don't forget to split that out in your labor model as well. The overhead base in this case includes all direct labor, which by definition includes direct project labor, bid proposal, and independent research and development. So there's the direct labor, R&D labor, along with an allocation of the fringe benefits that come along with those. That then calculates an overhead rate. G&A and fringe, they calculate just as they had before. Again, the worksheet is again splitting out fringe into its separate cost area. Same with G&A. So they calculate just the same. And again, for the G&A rate, you have the opportunity to modify the base as you had before in the other models. Now let's go back and visit the SF424 application again and see where this information goes. For fringe costs, if they are calculated separately, remember, you'll need to apply the fringe rate to each labor budget line somewhere outside the application form, then input that figure into this fringe column. Unfortunately, the form doesn't have a place to put your fringe rate as a percentage, at least in this labor section, so it won't calculate it for you. You have to calculate it outside the budget and input it into the budget. You'll also have to provide a short narrative explaining what costs are in your fringe pool, just like those we saw on the DOE model, and the basis or the base, which is usually all at-work labor, meaning labor less any of the paid time off, since the paid time off is part of your fringe pool. You would not have to address this section if you use a single indirect rate approach. Section H of the budget form requires the following: indirect cost type, we saw that before. For most of you, this will be a G&A and a qualifier saying it's either a total cost input or a modified base. The indirect cost rate is next. That's the G&A expressed as a percentage that you calculated using one of those DOE models. The next column is the base. That's the number which you are applying the indirect rate to. Again, this could be all total cost, called total cost input, or modified cost, where the G&A is only applied to certain project costs, or perhaps a project cost has been excluded from the base, saying that a different way. This then derives the budget number for your indirect costs. Remember the importance of this number. It represents the amount of funds you will derive from the grant to subsidize or completely support your administrative costs. Section H of the budget justification form calls for a brief narrative articulating the indirect rate percentage, the actual indirect costs for the budget, and the G&A base. It also asks that you provide your indirect rate calculations along with your budget application. So that would either be the DOE model or some other model that's appropriate. Although the FOA does allow submittal being deferred until after your notice of award. But again, we're encouraging you to be able to supply that indirect rate model along with your application. And you have, whenever you choose to submit though, you have 3 DOE indirect models to choose from. So in review, really you need to decide on first your what type of indirect rate structure you're comfortable with. The single rate is typically fine for most folks. If you're familiar with or comfortable using the fringe as a direct cost, then otherwise called the two rate model or the two pool model, that's fine too. Uh, you have a decision on what kind of G&A base to use, whether it's the total cost input base or a somehow modified G&A base, otherwise known as a pass-through method. And then from that, selecting the appropriate DOE model. And again, unless you're really familiar with how all this works, I would recommend using either the single rate model or the fringe as a direct two rate model, and leave the three rate model for some other time. So select the appropriate DOE model, use realistic budget figures, really focus on the details on the labor when you're figuring out the labor portion of your indirect rate budget. So with that said, thank you for watching this demonstration of the DOE indirect rate models, and we wish you the best of luck.